Hello and welcome to Startup Street. I'm Arundhati Ramnan and these are the top headlines from the startup world. E-commerce giant Amazon will integrate its logistics network and suite of SaaS products with ONDC. This integration will provide greater technology support to the 11 lakh sellers Amazon has and further empower small businesses. Private equity fund Chris Capital is in talks to invest around $100 million in omni-channel eyewear unicorn Lenskart. As per a report, if the PE firm joins the financing round, it would take the total ongoing funding round at Lenskart to around $500 million. Existing backer Alpha Wave Global may also participate by buying shares. Former Nazara CEO Manish Agarwal's Web3 gaming startup Kratos Studio gets 160 crore rupees in seed funding round from Axel, Process Ventures, Courtside Ventures, Nexus Venture Partners, Nazara and others also invested. The seed round values the startup at 1,200 crore rupees. Ride-hailing major Uber is looking to partner with third-party taxi providers to buff up its cab fleet in India. This is also part of a global initiative to curb the shrinking cab fleets across the world. The company is talking with private and traditional taxi operators in India to work through its third-party taxi integration service. Alibaba reduced its workforce by about 19,000 employees last year as it adopted to a global economic chill and shifted focus to cost efficiency. The online retailer let go of more than 4,000 workers in the final quarter of the year, says Bloomberg. The layoffs come after it reported its first ever contraction in revenue.
Those are the headlines we're tracking for you this evening. Flipkart-owned Myntra Beauty has been witnessing an uptick in demand. With over 1,400 brands and 75,000 plus products, the beauty and personal care category has been one of the fastest growing categories on Myntra and continues to scale its selection of international, domestic as well as D2C brands with an emphasis on catering to the various needs of states and niches of consumers. With India's e-commerce market pegged to be $150 to $170 billion by 2027, there is clearly immense potential for growth. To talk to us about Myntra's road ahead and the emerging trends in India's booming e-commerce market, joining me now is Myntra CEO Nandita Sinha. Nandita, welcome to Startup Street. Now, the beauty and personal care category has recorded 55% of all orders coming from metros and tier 1 cities, while tier 2 to 3 plus cities and towns contribute to around 45% of the segment. So tell me, what new trends do you see emerging and what have been the top selling products?
Sure. Thank you so much for having me here. And I think, like you said, while 55% of the growth of the orders are coming in from Metro T1, we do see 45% of the orders coming from T2 plus towns, and that is growing faster than Metro. And what are some of the big trends that have emerged? I think the two trends which have really created this growth over the last few years for Myntra. One is the fact that more and more niches which were earlier unavailable and inaccessible to customers are now being accessed by them through a platform like Myntra. And therefore, you have a lot of new age niches and need states which are being catered to. You have a category like scalp care, a category like, early jobber and late makeup, all of these categories growing, but also new formats which are probably earlier were internationally only accessible, like eyebrow palettes. These are all new formats which are growing. And also, I think the emphasis on brands which are catering to a certain need state through very, very specific ingredients and delivery. So, for example, science and performance care-based skincare is a booming category. Conscious beauty is a booming category. So I think the big two trends are brands which are catering to niche need states, and formats which were erstwhile not very popular are kind of gaining traction. Customers from T2 cities. And I think third, even male grooming as a category has seen almost 135% growth on Myntra. So I think these are all the different trends which are driving growth in the category, especially for us at Myntra.
All right, Nandita, let's now talk about the growth of the company. Myntra witnessed a CAGR of 1.5x of the market from 2020 to 2022. What has led to the 2 to 3x growth so far this year as well? And how do you see 2023 pan out for you in terms of revenue growth?
So, for us, the biggest driver for our mission actually has been to democratize fashion through technology. And therefore, we took the same mission in the beauty domain as we set out on our mission to grow the category. Our job is to really democratize beauty through technology, and therefore our investments have been on creating very, very tech enabled tools to help the growth of beauty in the country, especially through e-commerce. Some of the big forays that we made were assisted selling tools. We have tools like Product Finder, which is where customers can create their profiles and build their need states and be able to grow. You have products like virtual try-ons where customers can try out different beauty products and be able to find out the shade and the product which suits them. We have these with two brands, L'Oreal and Maybelline, but extending to Lakme, MAC, but also many other brands through the year. We have products like AI Skin Analyzer. We started with skin, but then we saw tremendous success and we extended it to hair also. And finally, our foray into social commerce through Myntra Studio and Myntra Live, which is an end-to-end shoppable experience through Myntra Studio, but really leveraging the edutainment need of beauty as a category through Myntra Live, and having 2 hours of live every day for beauty brands like Lakme, etc., participate in these in Myntra Live, but also have celebrity-led lives for brands which they are creating recently. So Masaba Gupta doing a live for launch of Love Child, but also influencers who are native to this digital influencer ecosystem, creating brands. For example, Malvika Sitlani building a brand like Masic and launching it through a Myntra Live with 17,000 plus engagement and viewers, as well as a lot of really incredible engagement. So I think tools for us have helped us grow and helped us build towards our vision of democratizing beauty through tech.
Okay. Now, this year, Myntra aims to make 70 to 80% of the women consumers, that is 3 out of 4 women consumers on the app, try out and experience Myntra Beauty. But what is the kind of traction you hope to generate? Also, Nandita, what are your plans to take on the growing competition in the space as large conglomerates are vying for the share of the pie?
Sure. I think for us, one of the biggest, one of the things that we do well is we create experiences which are unique for brands to be able to engage with customers. I spoke about all of these brands which are all of these experiences which are tech enabled. And I think what happens on our platform is, because of our personalization approach and features, we are able to actually cater to the unique need states of each consumer. And this is what we believe will take us to 3 out of 4 consumers trying out beauty on the platform or engaging with beauty on the platform. I think we, like you said in the beginning, we have 1,400 brands, 75,000 plus products on the platform. This year, we will add 50 plus international brands as we go forward, but also continue to deepen our foray with homegrown D2C brands, because I think that's where there is a need for this country to really experience different beauty products, different need states, and the different brands that are catering to it. With our largest premium consumer base in the country on e-commerce, we have the opportunity to really engage with these consumers through these brands. And that's what we will continue to do.
All right, Nandita, one final question before I let you go. Your latest partnership, you also mentioned this in the interview earlier, has been with Love Child by Masaba Gupta. What is the kind of impact you hope to see with this partnership? Also, broadly speaking, how are the celebrity partnerships working out for you? What kind of revenue growth have you been seeing courtesy these partnerships?
So I think, the biggest, as we look at some of these partnerships, and specifically talking about Love Child and Masaba Gupta, I think the fact that there are 2 things which really work for this partnership. One is the fact that Masaba is a digitally native, celebrity influencer, and really has a point of view on beauty, fashion, which is very well respected. And therefore, her foray into this category, especially with a point of view around formulations which are keeping in mind Indian skin tones and undertones in mind, and our ability to really personalize this offering for the customer as they find and experience beauty on the platform. That's what actually brought the 2 teams together using technology to be able to help consumers experience these products, which are specially created for Indian women in mind. Also, the fact that we are an online platform, we have our large customer base are digitally native customers across different city tiers. A celebrity like Masaba really appeals to that customer set, and therefore that also brought us together. And when both the customer set as well as the mission are aligned, it's easy to kind of see the growth that we hope to see with this partnership as we go forward. But all of our partnerships, as we align the customer type who's digitally native, as well as each states that the brands are fulfilling, we see those partnerships really thrive with us. And like I said, there are Malvika Sitlani being a digital influencer, she's a beauty influencer of great repute. When she creates a brand like Masick and we work with her to launch it on the platform, we see a lot of traction coming through also.
All right, Nandita, we've completely run out of time, but many thanks for joining us on Startup Street and wish you the very best with all your expansion plans.
Thank you so much. Thank you so much. Thanks.
We kicked off our special series called the Unicorn Health Check with the aim to create a report card of our most valued startups, delving deep into what's working and what's not. Today, we're going to look at India's e-commerce roll-up startups. Now, India's e-commerce market has been growing rapidly, and the COVID-19 pandemic gave that trend a massive boost. Just to help you understand how massive this market really is, sample this. India's e-commerce market is expected to double its penetration to about 10% and hit a scale of a whopping $150 to $170 billion by 2027. But here's a theme that's taken India by storm over the last 2 years. E-commerce roll-ups, or the Thrasio model. What is it? These are a new breed of startups that specialize in acquiring fast-growing digital-first brands and scaling their products. The trend was started by US startup Thrasio, which acquires successful third-party Amazon sellers and gives their founders a lucrative exit. Thrasio was founded in 2018 and took only 3 years to turn a profit. Post this, we saw over $300 million being pumped into India's e-commerce roll-up startups. Essentially, e-commerce roll-up companies acquire cash flow positive brands, but instead of acquiring the whole company, they structure it as an asset sale. These companies also raise debt funds and use it to service the deal terms. The Thrasio bug has now hit India, and the space has companies like Mensa Brands, Global Bees, Goat Brand Labs, Upscaleo, Evenflow, and 10 Club. Let's now take a look at the two unicorns in this space and do a health check on their financials. Mensa Brands became one of the fastest Indian startups to enter the Unicorn Club in November of 2021. The company accomplished this feat in just 6 months after it raised $135 million in a Series B round. The Thrasio-style company registered a revenue of 310 crore rupees in its first year of operations. The Tiger Global-backed company acquires D2C brands across 3 verticals, which is home, lifestyle, and beauty. And in FY22, the company spent over 728 crore rupees in acquisitions. The company acquired a whole host of startups during FY22, which included the likes of Men's XP, iDiva, and HIP. With expenses of nearly 450 crore rupees in FY22, Mensa Brands registered a loss of over 135 crore rupees in the first fiscal year. Now, on a unit level, the company spent 1.44 rupees to earn a single rupee. While the company has been claiming to hit profitability since its unicorn round, the startup is yet to hit break-even on a group level. Now, the next one is Global Bees, which became the second Thrasio-style startup to turn unicorn as the demand for D2C brands picked up. The startup, which has 12 brands under its belt, has totally raised around $260 million. The SoftBank-backed firm posted a consolidated loss of 41 crore rupees. Incorporated in May of 2021, the unicorn's total revenue stood at over 121 crore rupees, while total expenditure came in at a little over 157 crore rupees. However, with these figures, Global Bees has a high disparity between its value and its revenues. It commands an 88x multiple valuation to its revenues, and the company spends 1.52 rupees to earn a single rupee. Now, India's e-commerce roll-up market is still nascent, but the potential is massive. With more Indians taking to the internet, India now has the 3rd largest shopper base in the world, providing e-commerce roll-up companies the perfect opportunity to scale and grow. On that note, it is time for us to head into a short break. But coming up next in our special segment, Female Future Forward, we put the spotlight on Fresh Start, a global food tech incubator, and its CEO, Nogasela Shalev. All of this on the other side. Welcome back. You're still with us on Startup Street on our special initiative, Future Female Forward. Today, we put the spotlight at Noga Shalev, who has had over 15 years of experience in the food industry and is the CEO of Fresh Start, a food tech incubator that is part of the Israel Innovation Authority. My colleague Shruti Mishra caught up with Noga in Israel on the sidelines of the Accra Global Investors Summit to find out about Fresh Start's investment thesis and the future of food tech. Take a look.
Noga, talk to me about your investment thesis. How do you help your portfolio companies beyond just funding? And also, if you could talk to us about some of your star portfolios.
As an incubator perspective, that we have to provide the startups with everything from funding all the way to the infrastructure in which they create their R&D, and of course all the way into business and the relationship that they should create, whether it's investors or with strategic partners going down the road. In order to do that, we provide them within the incubator all these facilities and our professional team support, as well as our partner support. And the concept, of course, is how to bring these technologies in the most scalable way that will actually be very much fit for the industry. So we're helping them or guiding them into the right direction in that sense. In terms of how technology can really create a difference, I think the gaps and the challenges that we're facing as a food industry are immense, whether it's the food waste that we're seeing, whether it's the pollution that the industry currently creates and drives us towards alternative proteins, for example, whether it's the need to find better and healthier ingredients in one way or another, just even better for each of us on its personal level, because we understand there's a very huge difference between each and every one of us in that sense. So personalizing the food, improving the nutritional value of it, and doing all that within a sustainable value chain is a very big deal. And this is what we're looking to do by creating a lot of impact.
How has the food ecosystem changed in terms of technology? What new technologies do you see emerging? What excites you about this space?
So there's been a lot happening in this space in the past few years. I think alternative protein has been covered at large, and I think I'll try and address your question, maybe speaking about the spaces or the types of technologies that we see coming in. So one very exciting thing is the growth of use of synthetic biology or biotechnology altogether coming into food technology. And this is in order to help us be more resilient or optimized, more, I think, sustainable in many ways, and allow us to reduce waste as well. So just using these tools, using drug discovery tools, using just genetically modifying the elements that we're using within our food, even though it might create some alarm, on the other hand, it really allows us to overcome the problems that we see with the climate change, for example. I'm also very much excited about the potential that using more and more, or leveraging the data that is collected within this industry could do, whether, again, it's for optimizing, for reducing waste, whether it's for being more right and accurate and fast in creating new products, and whether it's implementing them within new ingredients within existing products out there, and whether it's fitting the right nutritional diet for each and every one of us on kind of personalized nutrition element.
AI has immense potential for the sector, but what are some of the immediate interventions that you see that can perhaps change the way food businesses are run today?
So I think nowadays you see most of the innovation around the space around the areas of supply and demand to make a better alignment and manage better the waste that we see in this industry. But the use of data is really almost endless. We see a lot of innovation coming around R&D, utilizing data in order to improve the production and the development, of new products and new ingredients coming in. Again, whether it's fermentation, where we have to be very specific on the design of the actual proteins that we're producing or other ingredients that we're producing there. A lot of excitement around, again, the microbiome and kind of mapping the physical elements of each and every one of us in order to provide better and more accurate nutrition. In these ends, things are a bit at the beginning right now, but I see huge steps being happening in the next coming years.
How can technology help build a world for the future where we're going to see huge food shortages, as climate change has impacted the natural ecosystem?
So this basically summarizes a lot of the things that you've asked, because we're talking about creating more either resilient sources for us to produce from, whether it's crops that are better fit for the changing climate, whether it's completely new technologies, creating ingredients out of different sources, like that is cultivated meat, like that is fermentation, for example. So how do we bring these ingredients, keep their nutritional values, and doing it without relying on the agriculture, which is what we used to do up until now, whether it's animal farming or just crops farming. So that's a huge element out of it. The second is, how do we optimize the whole process end to end to make it shorter, to make it more local, again, not relying on this huge global food system that we've been used to so far and that we've seen in the past few years that is under threat in a sense.
It is Friday, and it's time to see how the startup space fared in terms of new deals this week. 10 deals took place, valued at $185 million as per data from Venture Intelligence. Here are some of the notable deals. D2C online meat seller Fresh to Home bagged $104 million from Amazon, Iron Pillar, Investcore Group, Investment Corporation of Dubai, and others. Upskilling platform Next Wave raised $33 million from Greater Pacific Capital and Oreos VP. Minto got $20 million from PayPal, British International Investment, HDFC Bank, and Pravega Ventures. That's not all. AI solutions provider for automotive industry Entangles raised $10 million from Baring India, and risk compliance platform Scrute Automation got $7.5 million from Mass Mutual Ventures, Lightspeed Ventures, and India Partners. Overall, the startup world has seen over 114 deals in 2023 so far, valued at $1,225 million. And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.